quick sort of recap and video based on the kind of standard retail trader when it comes to trading the financial market, specifically FX. Now, our signal service currently, we've got 3 positions open. We've got a Euro JPY long, we've got a CAD JPY long, and we also have a CAD CHF long. Now, what I just wanted to actually run through, as you can see, first of all of these are sitting in profit. I will post our trade screen so you can see the proof of those entries. But what I wanted to talk about was actually just the standard retail trader and what a retail trader would do in these scenarios. So the market is very much there to trick us a lot of the time, especially the retail traders that don't really know what they're doing and following the standard rules in terms of trend lines, support, resistance, etc., etc. Now, what a lot of people would be doing, certainly, let's say CAD CHF, for example, is we have this kind of trend line coming across here, okay? And what we had is we reached that trend line, we then rejected our EMAs, and then boom, we started heading down. Now, this is a perfect bit of manipulation and trick for the retail trader to entice people to go short on this market. Now, as you can see, we actually waited for this movement to occur and actually executed a long position here. So these kind of things happen very, very regularly. And as you can see, in terms of where we've entered at that perfect position, and the market has only gone up since we've entered, okay? What you need to do if you're looking to become a good, strong, professional, and profitable trader, you need to think outside of the box. You need to understand that the market is not there for us to consistently make profit, okay? The idea of the game for market makers and brokers is to take that profit away from us, okay? So as you can see, that perfect scenario should have been a short, and I'm sure many traders would have done the same thing. You would have also potentially identified the fact that we had this sort of head and shoulders pattern occurring at this point. We had that retest right there, and then boom, we started heading down, okay? And this is where many traders get tricked, okay? And that's where you need to be actually ahead of the game and understand that to win in this market, you need to think outside the box, okay? So our entry on this was very, very good, very well timed. And as you can see, we're sitting currently at about sort of 30, 40 pips profit so far. Absolutely zero drawdown on this trade whatsoever. And therefore we're in a very favorable position to actually see this market now break out and go higher. Trend lines do work, absolutely, trend lines do work. Where we are now, we've actually managed to break that trend line and should hopefully be pushing up to the upside. And another trick in terms of retail traders is what a lot of people will do is actually wait for this to break and then wait for a retest of this region. Now, the issue with this is your risk reward is a lot worse than what we've done. You're in the market very, very late. And of course, the market can become quite volatile, and therefore you could actually have a lot of drawdown on your account, could even hit your stops just because you're entering too high. Okay, if we look at another one, CAD JPY, another perfect example, we have this strong trend line here, which was broken. We have that retest, okay, around that trend line and then reject. So everyone here is going to be looking at going short, okay? Everybody here would be looking at going short. Our entry was a long position, nicely timed, 82.366, and we're currently sitting up about 30, 40 pips with a lot of room to the upside. Now, at this point, we can move our stops to break even, so we've got absolutely zero risk on the trade and all to gain as well. And the final one, Euro JPY, exactly the same in terms of retail traders would probably look at getting into this market a little bit too late. Now, they would be waiting for this trend line cross, okay? They wait for this trend line cross, and then on this candle here that starts moving, this is where you'll be buying. Okay, so if you were buying at this point, okay, and I'll just show you an example in terms of risk reward and the difference that it makes, you would start to think about buying as this candle is moving up and pushing away, saying that we finally broke the EMAs, the trend line, and therefore we'll be moving up. So if you entered this position at this point, you had a stop at exactly the same point. And let's say you had the target at the same point that we've got, which is actually a little bit higher. It's actually 121.85, I believe. As you can see, the risk reward on our trade okay, if we were to hit that target, is around 6 risk reward. Okay, around 6 risk reward. The risk reward on the retail traders trade, okay, is around 2.5. Okay, so you can see the difference when you really start to think outside the box, when you learn the techniques that the market is going to be against you most of the time, and that's why timing is crucial, entry is crucial, and that bigger long-term bias and knowing where this market is going to move before it does becomes very, very important. So guys, I hope you find that useful. Obviously, we have our courses and we have our signal service, which does teach you, precisely the way that we look at the market, and therefore how to enter these markets at a very sort of high probability location and with very, very strong risk rewards.